It's so interesting to me that individuals may not put as much emphasis on taxes as they should. It's the single largest expense that we will pay over our lifetimes. So what we're hearing from our clients right now, Brian, is what will happen with the potential tax changes? We think there's a very high likelihood that ordinary income tax rates could go up as soon as next year. Couple that with a high likelihood that corporate tax rates could go up, maybe not to the 28% that's proposed, but certainly 25% is more likely. Capital gains tax rates increases, we're kind of lukewarm on that right now, Brian, but that's certainly factoring into a lot of the decisions that clients are contemplating and the recommendations we're making. We work with multiple business owners in the Midwest and the Great Lakes region, and right now we're encouraging them to consider selling if they have not already and try to get that sale closed before the end of the year to hedge your bets.
Selling their family business or selling stocks or selling both?
Great question. Selling family businesses where it's appropriate and it meets the family's goals, and selling stocks. We work with a number of executives who have concentrated positions, so where it's appropriate for them, we think that they should dollar cost average out of the stock, which is their concentration.
Okay, so sell the family business. That's obviously a big job. That's a big story. From an equity market perspective, though, if you are in the income group that, by the way, the same income group that's likely to get a higher tax rate is also primarily the investing class as well, for good or ill, but we're CNBC, so we're going to talk about that. Do you lock in long-term capital gains? I mean, if I've owned Amazon for 12 years, should I sell some now?
I think it makes sense to do that, Brian. Again, we know what rate we're paying now. The risk of the capital gains tax rate increases being retroactive to the beginning of the year, we think that risk is low, or even April 28th as of the date of announcements. The past several capital gains tax rate increases have been as of the date of enactment or prospective. It's always a good idea to look at when you can lock in rates and looking at the economics of the stocks that you hold as well. And that's what a great advisor can do for you.
Do you think it's enough to bring down the overall markets?
We don't think it's enough to bring down the overall markets, but it's certainly a factor and a consideration in how we're guiding our clients. As an example, the corporate rate going up to, again, let's think of a 25% rate, and then the talk of a global minimum tax rate, which still has a long way to go. That is going to put pressure on certain companies, certainly those that have international exposure, and the other sectors are really, that's uncertain as to what the effect will be. So I think this week has shown us in the market that there aren't necessarily any new trends that we see forthcoming, but we want our clients to remain broadly diversified, and when we can, trim positions and take advantage of the volatility yesterday to add into our post-recessionary positioning.
So you were one of the buyers that's bringing the futures up right now, Jill.
That's right. Our equity analysts are always looking to see when we can buy. And we saw some interesting things happening yesterday with certain sectors, such as industrials, which for post-pandemic, post-recessionary positioning, that's a good day for us.
Shepard Smith here. Thanks for watching CNBC on YouTube.